Hey there, crypto warriors! Welcome back to Boni's Life, where we turn market chaos into trading clarity. I'm Boni. Now that we've finished analyzing upcoming events, let us also dive deep into the crypto markets with a comprehensive analysis that'll help you navigate these wild waters, whether you're a scalping speed monster, a swing trading strategist, or a long-term hodling superhero. Now, before we jump into the technical wizardry, let me paint you the current market picture. Bitcoin is sitting pretty at around $102,500, which is like being at a fancy restaurant and ordering the second most expensive wine. You're doing well, but there's still room to splurge. We're down about 1% in the last 24 hours. But hey, in crypto terms, that's practically sideways movement. The fear and greed index has dropped to 42, firmly in fear territory. Now, this is fascinating because just last month we were at 78, extreme greed. It's like watching a teenager's mood swings, but with more money involved. This dramatic shift from extreme greed to fear tells us something crucial. The market is experiencing a psychological reset, and historically these fear levels often present golden opportunities for the contrarian-minded among us. Our total crypto market cap stands at $3.2 trillion, with Bitcoin maintaining a commanding 64.2% dominance. Think of Bitcoin as the popular kid in high school. When Bitcoin moves, everyone else follows, sometimes reluctantly, sometimes enthusiastically, but they always follow. Short-term trading analysis, 1 hour to 1 day time frames. Let's start with our short-term traders, the adrenaline junkies who live for the thrill of quick profits and even quicker losses. If you're trading on 1 hour to 1 day time frames, you're essentially playing chess while riding a roller coaster. And I respect that level of multitasking. Looking at the 1 hour chart, Bitcoin's RSI dropped to 28. During recent liquidation events, that's oversold territory, folks. When RSI hits these levels, it's like finding a designer jacket at a thrift store. It doesn't happen often, but when it does, you pay attention. The MACD showed a bearish crossover, but here's the thing about short-term indicators. They're like weather forecasts, accurate for the immediate future, but prone to sudden changes. Volume tells an interesting story here. We saw massive spikes during the $370 million liquidation event that happened recently. When volume explodes like this, it's usually the market's way of saying, hold on to your heads, we're going for a ride. For short-term traders, these volume spikes are your bread and butter. They signal momentum shifts and potential reversal points. Key levels for short-term trading. We've got strong support around $100,000. That's not just a psychological level, it's like a fortress that's been tested multiple times. Resistance sits around $105,000 to $106,000. If you're scalping, these are your playground boundaries. Break above $106,000 with volume, and we might see a run toward $110,000. Break below $100,000, and $95,000 becomes the next target. Now here's where it gets spicy. Open interest is sitting at a whopping $96 billion. That's more leverage than a physics textbook. This massive open interest is like having a room full of people holding dynamite. One wrong move and boom, liquidation cascade. For short-term traders, this means opportunity but also extreme caution. When open interest is this high, volatility is your friend, but risk management is your lifeline. Mid-term trading analysis, 1 week to 1 month time frames. Moving to our mid-term traders, the strategic thinkers who understand that patience is a virtue, but not too much patience because this is still crypto after all. you're looking at weekly to monthly time frames, which in crypto years is like planning for retirement. The weekly chart shows Bitcoin in a consolidation phase between $95,000 and $112,000. We've been dancing in this range for several weeks now, like a couple at a wedding who can't decide if they want to slow dance or break into the electric slide. This consolidation is actually healthy. It's the market's way of digesting the previous rally and setting up for the next major move. The 50-day moving average is sitting around $98,000, providing dynamic support, while the 200-day is around $85,000. The fact that we're trading well above both these levels is bullish for the medium term. It's like having a safety net under your safety net, comforting for those who prefer their risk with a side of security. For midterm traders, it's crucial to watch the broader market dynamics. With Bitcoin dominance at 64.2%, we're in a Bitcoin-led market phase. Historically, when Bitcoin dominance is this high, it often precedes an alt season where alternative cryptocurrencies outperform Bitcoin. It's like waiting for the opening act to finish before the main show begins, except sometimes the opening act steals the show. From a fundamental perspective, the midterm outlook remains constructive. We're seeing continued institutional adoption, with companies adding Bitcoin to their treasury strategies. It's like watching corporate America slowly realize that maybe, just maybe, this internet money thing isn't going away. Regulatory clarity is improving, though it moves at the speed of government, which is somewhere between glacial and geological. Long-term trading analysis, 3 months to 1 year plus time frames. Now, for our long-term traders, the Zen masters of crypto who understand that true wealth is built over time, not over lunch breaks, you're looking at monthly charts and thinking in terms of cycles, halvings, and macro trends. You're basically the Gandalf of crypto trading, wise, patient, and occasionally dramatic. The monthly chart shows Bitcoin in a clear uptrend since the 2022 lows. We're in what appears to be the middle phase of a bull market cycle, if history rhymes, and in crypto, it often does a full karaoke performance. We could be looking at significantly higher prices over the next 12 to 18 months. The previous cycle peak was around $69,000, and we've already surpassed that, suggesting this cycle has more room to run. The Bitcoin halving effect is still working its magic. Historically, the most significant price appreciation occurs 12 to 18 months post-halving. We're currently in that sweet spot where supply reduction meets increasing demand. It's basic economics, but with more memes and volatility. From a macro perspective, several factors support the long-term bullish thesis. Global money printing continues, making scarce assets like Bitcoin increasingly attractive. It's like being the only person selling umbrellas in a rainstorm. Demand tends to be pretty strong. Central bank digital currencies, CBDCs, are being developed worldwide, which ironically validates the concept of digital money while highlighting Bitcoin's unique properties as a decentralized alternative. Technical setups and trading triggers. Let's talk specific setups because theory is great, but profits pay the bills. For short-term traders, watch for the following triggers. A break above $105,000 with volume above 50,000 BTC in 4 hours could signal a move to $110,000. Your stop loss should be tight around $103,000. For mid-term traders, a weekly close above $108,000 would be significant, potentially targeting $120,000 over the next month. A break below $98,000 on the weekly would be concerning, potentially leading to a test of $90,000. Long-term traders should focus on monthly closes. A monthly close above $110,000 would be extremely bullish for the next 6 to 12 months, potentially targeting $150,000 to $200,000. It sounds crazy until you remember that $100,000 sounded crazy when Bitcoin was at $10,000. Global Events Impact Analysis. Now let's address the elephant in the room. Or should I say, the geopolitical tensions in the Middle East. The recent US airstrikes on Iranian nuclear facilities caused a 3.2% Bitcoin drop, proving that crypto markets are increasingly correlated with traditional risk assets during crisis periods. It's like cryptos is growing up and joining the adult table of global finance. Exciting, but also slightly terrifying. The Strait of Hormuz situation is particularly important to monitor. If oil prices spike due to supply disruptions, it could trigger broader market volatility. Historically, energy crises have been both inflationary and deflationary depending on their duration and severity. For crypto, this could mean either a flight to alternative assets or a general risk-off environment. On the regulatory front, we're seeing a mixed bag. Norway's potential mining ban is concerning for the network's decentralization, but it's also creating opportunities in more crypto-friendly jurisdictions. It's like watching a game of regulatory whack-a-mole. Ban it here, it pops up there, usually stronger than before. The ongoing stablecoin regulation discussions in the US are crucial to monitor. Stablecoins are the plumbing of the crypto ecosystem, and regulatory clarity here could unlock significant institutional adoption. President Trump's recent comments supporting stablecoin legislation are encouraging for the broader crypto ecosystem, trading strategies for different time frames. Let's get practical with specific strategies tailored to each trading time frame. Short-term strategy. Scalping chart day trading. Focus on the 5-minute to 1-hour charts. Use tight stop losses, 1 to 2%, and quick profit targets, 2 to 4%. Trade the bounces of $100,000 support and rejections from $105,000 resistance. When the fear and greed index is below 40, look for long opportunities on oversold bounces. When it's above 60, consider short positions on overbought conditions. It's like being a market sniper. Precision, timing, and quick execution are everything. Risk management is crucial here. Never risk more than 1% of your portfolio on a single trade. With Bitcoin's current volatility, that 1% can feel like 10%. So position sizing is your best friend. Use alerts religiously. The market doesn't sleep, but you should. Midterm strategy, swing trading. Focus on daily to weekly charts. Look for trend continuation patterns after consolidation phases. The current $95,000 to $112,000 range provides excellent swing trading opportunities. Buy near the lower end of the range with stops below $93,000 and sell near the upper end with targets at $115,000 to $120,000. Dollar cost averaging DCA works well for midterm strategies. Instead of trying to time the perfect entry, scale into positions over several days or weeks. It's like eating a pizza. You could try to eat it all at once, but it's more enjoyable and less likely to cause problems if you take it slice by slice. Long-term strategy, position trading, hodling. Focus on monthly charts and fundamental analysis. The current market structure suggests we're in the middle phase of a bull cycle. Historical patterns suggest Bitcoin could reach $150,000 to $250,000 in this cycle. Though past performance doesn't guarantee future results, it just gives us something to dream about. For long-term positions, consider a barbell strategy. 70% in Bitcoin and Ethereum, 30% in carefully selected altcoins with strong fundamentals. Rebalance quarterly, not daily. The hardest part of long-term trading isn't buying, it's holding through the inevitable 30 to 50% corrections that will happen along the way. Risk management across all time frames. Regardless of your time frame, risk management is what separates profitable traders from expensive lessons. The current high open interest environment means volatility can spike without warning. It's like driving in fog. You need to slow down and increase your following distance. Position sizing should be inversely correlated to volatility. When the VIX of crypto, if such a thing existed, is high, trade smaller. When markets are calm, you can afford to be slightly more aggressive. Never, and I mean never, risk more than you can afford to lose. This isn't just trading advice, it's life advice with a financial twist. Use stop losses religiously, but don't make them so tight that normal market noise stops you out. A good rule of thumb, your stop loss should be beyond the recent swing low-high plus a buffer for volatility. It's like setting your alarm clock too early and you'll be tired, too late and you'll miss your opportunity. Market outlook and final thoughts. As we wrap up this comprehensive analysis, let's synthesize what we've learned. The crypto market is currently in a fascinating phase. We have fear sentiment at 42, massive open interest creating volatility potential, and geopolitical events reminding us that crypto doesn't exist in a vacuum. For the next 24 to 48 hours, watch the $100,000 support level closely. A break below with volume could trigger more liquidations and a move toward $95,000. Conversely, a reclaim of $105,000 with conviction could spark a rally toward $110,000. The medium-term outlook remains constructive despite recent volatility. The fundamentals supporting crypto adoption haven't changed. Inflation concerns, currency debasement, and the ongoing digitization of finance continue to drive demand for alternative monetary systems. Long-term, we're likely still in the early to middle phases of this market cycle. History suggests the most explosive moves often come in the final 6 to 12 months of a bull market, typically accompanied by mainstream media coverage and your barber asking about crypto investments. Remember, successful trading isn't about being right all the time. It's about managing risk and staying in the game long enough for the probabilities to work in your favor. Whether you're scalping the 5-minute charts or building generational wealth through long-term holding, the key is consistency, discipline, and continuous learning. The crypto market is like a 24/7 casino where the house edge can actually work in your favor if you play your cards right. But unlike Vegas, the drinks aren't free and the losses can be very real. That's a wrap on today's comprehensive crypto market analysis. If this helped clarify your trading strategy or gave you new insights, smash that like button, subscribe for more market analysis, and ring that notification bell, because in crypto, timing is everything. What's your take on the current market setup? Are you bullish, bearish, or just confused? Drop your thoughts in the comments below. I read every single one, and your insights often spark ideas for future episodes. Until next time, trade smart, manage your risk, and remember, in crypto, we're all just trying to figure it out one candle at a time. This is Boni, signing off from Boni's Life. Stay profitable, stay humble, and I'll see you in the next one.